Okay, today we see the 2014 question paper of Rani Chennamma University and particularly related with fund flow statement. Regarding fund flow statement, we see the 5 marks question. In the 5 marks question, you see the question number 5. In this question number 5, from the following profit and loss account, calculate fund from operation. They asked to calculate fund from operation. Gross profit is given to you people. You may calculate on the basis of gross profit. In the gross profit, you deduct the operating expenses related to the business paid in the form of cash, and you take the operating incomes. Operating income minus operating expense, that will give you operating profits. Okay, but as you already studied, taking into account the net profit, you go follow the same method. Okay, you take the net profit and add non-operating and non-cash expenses and deduct non-cash and non-operating incomes. Out of given items, you check the non-operating cash and non-cash and non-operating expenses and incomes. You see here, profit on sale of furniture, it is non-cash item, non-operating income. Sale of old machinery is also non-operating item. Interest on investment is also non-operating income. Dividend received, this is also non-operating. Okay, these four items are not related to operation, so you have to deduct from the net profit. And salary is relating to operation, rent is relating to operation, printing and stationery, these are related to operating expense. Okay, and depreciation on plant, depreciation on building are related to business, but they are not in the form of cash. They are not in cash, non-cash expenses. And so you have to add those items. Goodwill written off, non-operating. Loss on sale of plant, non-operating. Next, provision for tax, non-operating. Proposed dividend, non-operating. These are the non-operating expenses. So you add these non-operating expenses. The non-operating are 5, depreciation 2, goodwill 3, and loss on sale, provision, proposed dividend. These are non-operating or non-cash expenses. You add these and less 4 items, you will get the fund from operation. You see the solution. Okay, schedule of changes in what schedule change heading. Okay, so statement showing funds flow from operation. Particular amount, you take the net profit. Only closing balance of net profit is there. Opening balance of profit is not given in the problem. You take 80,000. You add non-operating and non-cash expenses. Depreciation on building, depreciation on plant, loss on sale of plant, goodwill written off, provision for tax, proposed dividend. These are the expenses not related to operation or not in the form of cash. Okay, so you add these 6 items. You add these 6 items, total is 2,20,000. 2,20,000 is the non-operating and non-cash expenses. Now total is 3 lakh. In this 3 lakh, you deduct non-operating and non-cash incomes. Okay. First is profit on sale of furniture, sale of machinery, that is old asset, interest on investment, dividend received. These 4 are not relating to operation. So you deduct these 4 items. That is 1 lakh is the total. You deduct 1 lakh. Then whatever balance remains, the balance is called as funds from operation. In this way, you have to prepare the fund from operation statement. Okay. Now we see the 15 marks question. 15 marks question asked for 2014. 2014 to 15 marks question we see. Okay, this is the question. Following are the balance sheets of Suresh Limited as on 31st March 2012 and 31st March 2013. Okay, you see the share capital. Share capital 1 lakh, 2 lakh. Increase is there. 1 lakh increase. That is called as issue. Increase takes place only due to issue of shares. Then reserve and surplus minus 40,000, 20,000. Minus 40,000 is called as loss. Plus 20,000 is called as minus 40,000 is loss and 20,000 is the profit. So you take these 2 amounts very carefully because one is loss, another is profit. Starting amount, opening balance is loss and closing balance is profit. Therefore, you take this item very carefully. Okay. Thereafter, next item is long-term borrowing, 2 lakh, 1 lakh. So there is a decrease in the long-term borrowing. Decrease in the long-term borrowing. So decrease takes place only when you repay that. So it is the application. Current liability is there, goes to schedule of changes in working capital. Okay. And next is fixed asset. Fixed asset is there. Fixed asset you have to take in the fund flow statement. Increase in fixed asset is application, decrease in the fixed asset is source. And long-term investment is also comes under the fixed asset. So there is an increase in the long-term borrowing. You take that increase as additional investment made, that is the application. Then current assets you take in the schedule of changes in working capital. Okay. Inventory, trade payable, cash and cash equivalent. And you see the notes. In the notes, share capital is there, 1 lakh, 2 lakh. So 1 lakh increase is the source of fund. That is the issue of share. P&L account minus 40,000 plus 20,000. So minus means loss. You enter this amount very carefully. In the fund from operation. Debenture 2 lakh, 1 lakh. So decrease in debenture is called as redemption of debenture. And it is the application. And creditor is only one current liability comes in the schedule of changes in working capital. Machinery 2 lakh, 2 lakh. There is no change. Okay, no purchase, no sale. But you have to see the adjustment and give consideration to this point. Thereafter, long-term investment. Long-term investment 50,000, 1,20,000. So there is an increase of 70,000. So this is application of fund. Additional investment made. Stock, debtors, cash. These are the current assets take in the schedule of changes in working capital. Okay. Next is you see the adjustment. Provision for depreciation on 31st March 2012 is 50,000 and 31st March 2013 was 65,000. 2 years provision for depreciation is given in the adjustment. And you have to prepare the provision for depreciation account. Provision for depreciation account is to be prepared to find out the current year depreciation. Current year depreciation, remember this. And this provision for depreciation, they will give you in 3 places, in any one of the 3 places. It may be given like this in the adjustment. If it is given in the adjustment, you have to add in the respective asset. You have to add in the respective asset. Opening 50,000 in the opening balance of asset, closing 65,000 in the closing balance of asset, and take the original value of asset while preparing the account. While preparing the account, you have to add provision if it is given the adjustment. And if this is deducted in the respective asset in the balance sheet note itself, it is deducted in the balance sheet notes itself, and you take the original balance of the asset, original balance of the asset in the account. Okay, in some cases they will give you under the provisions, provision of depreciation in the provisions in liability side, in the liability head. Okay, so if it is given in the provisions head or short-term provisions, then you take the original value of asset. Original value of asset is to be taken to prepare the asset account and find out the profit or loss. Okay, so in this case, the original value of asset is, you see here, machinery, 2 lakh opening closing same are there, but you have to take opening balance 2 lakh plus 50,000, 2 lakh 50,000, and closing you have to take 2 lakh plus 65, 2 lakh 65,000 you have to take and prepare the accounts. You take the opening and closing balance of the assets at original value, and thereafter you make the adjustment. A machine costing rupees 30,000 sold for rupees 16,000. 30,000 cost machine sold for rupees 16,000. Okay, and depreciation charged on that is 10,000. Out of 30,000 cost, you deduct 10,000 depreciation. 20,000 is the present value. 20,000 is present value. In 20,000 present value asset sold for 16,000. 16,000. And this is the loss on sale. 20,000 is the value of asset. Sale value 16,000. So difference of 4,000 is called as loss on sale. Loss on sale. Okay. This is the point to remember. And depreciation charged on the sold asset 10,000 till the date of sale 10,000. This is to be shown in the machinery account. This is to be shown in the machinery account as provision for depreciation. Sariya name in Kotanella, e depreciation 10,000. This machinery account tours. This Yavak tours and the 10,000 e provision sale ಮಾಡಿದ asset malin depreciation. Sariya name ಸೇಲ್ ಮಾಡಿದ ಅಸೆಟ್ ಮೇಲಿನ ಇಲ್ಲಿವರೆಗೆ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್ ದಾಗ ತೋರಿಸಬೇಕು, ಅಸೆಟ್ ಅಕೌಂಟ್ ದಾಗ ತೋರಿಸಬೇಕು. ಯಾವಾಗ ಇದ್ರ ಪ್ರೊವಿಷನ್ ಫಾರ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್ ಹಾಕಿದ್ರ, ಡೆಪ್ರಿಸಿಯೇಷನ್ ಪ್ರೊವಿಷನ್ ಅಕೌಂಟ್ ಹಾಕಿಲ್ಲ ಅಂದ್ರೆ ಇದನ್ನು ತೋರಿಸಬೇಡ್ರಿ. ಸರಿಯಾಗಿ ನೆನಪು, ಇದನ್ನು ತೋರಿಸಬೇಡ್ರಿ. ಕ್ಲಿಯರ್? ಓಕೆ. In this way you have to prepare the account and you have to prepare the provision for depreciation account to find out the depreciation. Okay, only one adjustment is here, but it is very complicated. You see the solution. Schedule of changes in working capital. First, you take the current asset. Stock 60,000, 80,000, 20,000 increase. Okay. Debtors 10,000, 20,000, 10,000 increase. Cash in hand 40,000, 50,000. Again 10,000 increase. You take the total of current asset. First column 1,10,000. Second column 1,50,000. Then you take the current liabilities. Current liabilities. You take current liabilities. The current liability is only one. There is only one current liability. That current liability is creditor. 1,00,000, 1,50,000. 50,000 increase is there. You take in the decrease column and take the total. Current liability total, first column 1,00,000, second column 1,50,000. Now you take the difference between A and B, that is working capital. 2012 working capital is 10,000. 2013 working capital is 0. There is no difference. 1,50,000 asset, 1,50,000 liability. There is no difference. There is no working capital. And you see here 2012 10,000 working capital, 2013 no working capital. So working capital reduced. Working capital reduced. Clear? And you take the third and fourth column total. Third column total 40,000, fourth column total 50,000. 40,000, 50,000. Clear? Then decrease in working capital is 10,000. Okay. 10,000 is decrease in working capital. Total you take. After this, you prepare the plant and machinery account. Plant and machinery account. You see here particular amount. To balance brought down 2,50,000. How it is 2,50,000? You see here. Two lakh is the opening balance plus 50,000 is the provision for tax given in the adjustment. Total is 2,50,000. Like this, you enter. Then closing balance you enter. Closing balance is also 2 lakh, but I have taken 2,50,000. How it is 2,50,000? You take 2,50,000. How 2,65,000 is? 2 lakh plus 65,000 provision. So total balance is 2,65,000. In this way, you have to take opening balance and closing balance. 2,65,000. If the depreciation is, this balance is before deduction of depreciation, you take the original balance. Don't take the depreciation. Okay. If the depreciation is deducted, you have to react. Otherwise, if depreciation and original asset is given, you take the original value of asset. Original value of asset. Now you take the sale. Buy bank sale is 16,000. Buy provision for depreciation 10,000. This is the 10,000 accumulated depreciation on sold asset. Sold asset. Clear? Then loss on sale is 4,000. So now it total is 30,000. 30,000 equal cost. Mohammad sir cost 16,000 sale aito, 10,000 depreciation aito, Nax or loss aito. In this way you have to show it. Okay, and thereafter you close the account and take the difference. Difference 45,000. 45,000 is called as purchase of asset. Purchase of asset. Now you prepare the provision for depreciation. Provision for depreciation account. Buy balance brought down 50,000. To balance carried down 65,000. Okay. Then you write here to machinery account 10,000. This amount we take from the above account. Above account. You see here. ಇದೆಲ್ಲಿಂದ ಅಂದೇನಂತ ಕೇಳಿದ್ರ 10,000 ರೂಪಾಯಿ ಇಲ್ಲಿ ಐತು ಅಕ್ಯುಮುಲೇಟೆಡ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಇಲ್ಲಿ ಈ ಅಮೌಂಟ್ ಇಲ್ಲಿ ಬರಬೇಕು ಸರಿಯಾಗಿ ನೋಡ್ಕೊ ಇಲ್ಲಿ ತಂದು ಬರಿಬೇಕು ಏನ್ ತೋರಿಸಿನಲ್ಲ ಈ ಅಮೌಂಟ್ ಯಾವಾಗ ಬರಿಬೇಕಂತ ಕೇಳಿದ್ರ ಪ್ರೊವಿಷನ್ ಫಾರ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್ ಹಾಕಿರ ಬರೀ ಆಯ್ತಾ ಪ್ರೊವಿಷನ್ ಫಾರ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್ ಹಾಕಿಲ್ಲ ಅಂದ್ರೆ ಇದೇನ್ 10,000 ಐತ್ಲೆ ಅಕ್ಯುಮುಲೇಟೆಡ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಇದನ್ನ ಇಲ್ಲಿ ಬರೆಯೋದಿಲ್ಲ ಸರಿಯಾಗಿ ನೆನ್ಪಿಟ್ಕೊ ಇದೇನ್ ಪ್ರೊವಿಷನ್ ಫಾರ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್ ಬರ್ದರಿಲ್ಲಿ ಇಲ್ಲಿ ಬರೆದ ಯಾವಾಗ ಬರಿಬೇಕು ಇದನ್ನ ಕೆಳಗೆ ಪ್ರೊವಿಷನ್ ಫಾರ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್ ಇದ್ರೆ ಮಾತ್ರ ಅಕ್ಯುಮುಲೇಟೆಡ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಬರೆಯೋದು ಇಲ್ಲ ಆಗಿತ್ತಂದ್ರ ಇದನ್ನ ಬರಿಬೇಡ್ರಿ ಬರೀ ಏನ್ ಬರ್ರಿ 16,000 ಸೇಲ್ ಬರ್ರಿ 4,000 ರೂಪಾಯಿ ಲಾಸ್ ಬರ್ರಿ ಟೀಟಾ ಎಲ್ಲಾ ಪ್ರಾಬ್ಲಮ್ ಹಿಂಗ ಮಾಡಿದೀನಿ ಎಲ್ಲಾ ಪ್ರಾಬ್ಲಮ್ ಇದನ್ನ ಬರ್ದೀನಿ ಅಕ್ಯುಮುಲೇಟೆಡ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಬರ್ದಿಲ್ಲ ಇಲ್ಲಿದಕ್ಕ accumulated depreciation is not taken in the previous problems, but in this problem I have taken the accumulated depreciation because provision for depreciation account I prepared below. Okay, idನ್ನ ಈ ರೀತಿ ತಗೋ after taking this amount you close the account, you close this account, total is 75,000 and difference is 25,000. This difference 25,000 is called as provision for depreciation, current year depreciation. ಸರಿಯಾಗಿ ನೆನಪು ಈ 25,000 ರೂಪಾಯಿ current year depreciation ಇದು ಎಲ್ಲಿ ಹೋಗ್ಬೇಕಿದ್ರ ಫಂಡ್ಸ್ ಫ್ರಮ್ ಆಪರೇಷನ್ ಹೋಗ್ಬೇಕು ಫಂಡ್ಸ್ ಫ್ರಮ್ ಆಪರೇಷನ್ ಇದನ್ನ ತಗೋಬೇಕು ಇದ ಸೇಮ್ ಪ್ರಾಬ್ಲಮ್ ಇನ್ನೂ ಒಂದು ಪ್ರಾಬ್ಲಮ್ ನ ಬಿಡಿಸ್ತೀನಿ ಓಕೆ ಯು ರಿಮೆಂಬರ್ ದಿಸ್ ಪ್ರಾಬ್ಲಮ್ ನೌ we prepare the funds from operation we prepare funds from operation table. Okay, funds from net profit 20,000. Add non-cash and non-operating expenses. Depreciation 25,000 ರೂಪಾಯಿ ಎಲ್ಲಿ ಬರ್ತದೋ provision for depreciation account ಹಾಕಿ ಬ್ಯಾಲೆನ್ಸ್ ತೆಗೆದೇನು. This is the balancing figure of provision for depreciation account. Remember this. Then you take the loss on sale of machinery 4,000. And there is no other items. So depreciation 25,000, 4,000, loss on sale of machinery from the account. 29,000 you add 49,000. Next, no other incomes, you deduct the opening balance of net loss is there, minus 40,000. If you deduct minus 40,000, but ಯಾರೇ ಕಳೆದ 9,000 ಇಟ್ಟೇರಿ 49,000 minus 40,000. You see this. minus in quote note. Okay, minus 49,000 minus plus. So 49,000 plus 40,000. Now your answer is 89,000. 89,000 is the fund from operation. 89,000 fund from operation. Like this you calculate. Okay. Now you prepare the fund flow statement. In the fund flow statement, fund from operation is 89,000. Sale of machinery 16,000. Issue of share, equity share 1 lakh. Okay. Purchase of machinery 45,000 as per your account balance. Redemption debenture reduced 1 lakh. Investment increased. I already explained 70,000. Okay. Then decrease in working capital 10,000. You take the total is 2,15,000. In this way, you prepare the fund flow statement. Okay.